In this video, I'm going to be teaching my friend Jay how to trade options in the stock market. You deposited $500. All right, let's go. All right. At the end of this video, we're going to check back in to see if you ended up making money or if you lost your entire $500 account. Are you excited?
I'm hoping to make some money.
Let's see. We're going to have you start off by opening your Robinhood account. And I'm not going to say anything. We're going to simulate what a beginner would do. And you're just going to go choose a random stock and buy a random option contract. And then at the end of this video, we'll check in and we'll see if you ended up making money or losing your entire $500. And don't worry, because we're going to go over a stupid, simple, beginner-friendly strategy so you won't be gambling. But again, we're trying to show you what not to do. So, you ready, Jay?
I'm excited.
Let's do it. You got Robinhood open. What stock are you trading?
SPY.
You got the SPY pulled up. That's the S&P 500 ETF. Okay, so the first thing you're going to do is click on trade. Okay, trade options. And when it comes to buying an option contract, you're going to have to choose an expiration date, a date at which the contract will expire. The closer the expiration date, the riskier. The further out the expiration date, the safer. Okay, so you decide which expiration date you want to go with. January contracts, and the further out those contracts, they're going to be more expensive. So you have a smaller account, which means you're probably going to have to buy a closer expiration date, because I can already see right away those are pretty expensive contracts.
Yeah.
I'm trying not to, I want you to make the decision, but I don't also want you to like come in and totally gamble.
What about the 10th?
Okay, the 10th. And now when it comes to choosing what is called a strike price, you're going to actually have to decide a share price at which you think that stock will go. Let's start by first asking, do you think SPY is going up or down?
I think it's going to go down.
Okay, so you're going to buy a put. So you're going to want to switch it to buy, put. And now the strike price. You can see here how it says share price is 682.65. So with puts and with any option contract, you're going to have what's called in the money and out of the money. Now, in the money is going to be safer. Out of the money is going to be riskier. And with puts, anything above the share price, okay, so like the 683s, the 684s, these are going to be in the money. Anything below the share price, okay, so the 682, 681, those are going to be out of the money. So in the money is safer, out of the money is riskier. So you could choose which strike you want to buy. And you have $500 in your account.
Yeah, so don't I have to go up, I think?
Those are going to be safer up, and they're going to be more expensive. So one in the money is actually above your account size. So unfortunately, you're going to have to go out of the money to fit, and be able to actually buy a contract within your $500 account. And so the further out of the money, you're going to have more risk. Obviously, those contracts will lose faster, but they'll also win faster, right?
Yeah.
That percentage, as it goes up or down, they're just riskier contracts because that value that you're betting on SPY by December 10th to be at, for example, you think by December 10th SPY is going to be at 658, kind of far out, right? Not super far, but it hasn't happened yet. SPY's not at 658 yet, so there's more what's called extrinsic value. Okay, so do you want to buy the 658s or?
I think we'll go with that one, yeah.
Okay, so you can click on plus and you can buy, it looks like you could buy like 5 contracts. 6 maybe? 6. All right, cool. So let's go click on review. Now there's 2 types of orders. When you go to send an order, you'll see it says limit or market. Okay, so limit order, you're essentially saying, hey, I want to get filled at this price, whether you're buying or selling. And a market order is you just saying, hey, I don't care what price I'm going to pay for these. I'm just going to get filled right away. Do you want to get in with a limit order or a market order? And the better thing to do is get filled at a limit order, because you're actually specifying what price you want to get filled at, but it doesn't mean you'll actually get filled.
So maybe not a limit?
I think...
Or we should... Or...
I don't want to say anything.
I know. All right, hold on.
Do you want to be like, hey, I don't care what I'm paying for these, I'm just going to buy them? Or do you want to be like, hey, I want to actually get my price?
Well, I want to be someone cautious, because like for some, I guess for me, like I know nothing. Mm-hmm. I know nothing.
Okay.
Do I really just want to be like, yeah, $500, whatever? Or do I want to be like, yeah...
I don't know. You tell me.
I want to be like, whoa.
I can't tell you. It's up to you.
All right, I'm going to do limit.
Okay, limit.
I think I'm going to go with
so
the limit.
Click on limit. Now, what you're going to see when you click on limit is that there's a bid and there's an ask. So the bid is $78, and that's $78. The ask is $79. So that's the spread. It's only $1 spread. That's good, right? A lot of people trade SPY. Lower volume stocks that people don't trade as much are going to have a much larger spread. So that's like a very small spread. So 78 would be the bid. That's obviously the lowest that we could see that you could buy those contracts for. So you'll save $1 per contract if you click review, and if you send that through, you'll get filled, more than likely.
Good luck.
SPY is very liquid. There's a lot of people that trade SPY, and there you go. So let's wait and see here if your order was filled. Click on done. Let's see. It might not get filled. It might not. Let's wait. So you have to be patient with a limit order. We actually don't know if you'll get filled. Like, the price could continue going up. Or in this case, you're short, the price could turn around, and then those contracts become worth more, and now no one's going to sell them to you for cheap. It's only $1 difference, so you got to decide, hey, am I going to miss this move if I think it's going to happen quick? Because if I think it's going to happen quick and I don't get in, then you're going to miss out on the trade. So would you rather pay an extra $5 right now to get in or not? Because you're not getting filled. And right now, those contracts, the value is going up a little bit. That's something you have to consider, right?
Yeah.
What do you
Maybe
say?
I will pay the $5 to go in, to get in.
So you can see, like, right now the bid is 79 and the ask is 80. What do you try to get filled at?
78.
There you go. So they're already $1 to $2 more expensive, because you're right. So you might want to quickly get in. I mean,
it's already
SPY,
gone up again.
see, SPY's turning around. Look, it's starting to go down, and now your puts that you want to buy are becoming worth more. So we could quickly throw in an 80 or 81.
I'm gonna go with 81.
All right, let's go. All right. At the end of this video, we're going to check back in to see if you ended up making money or if you lost your entire $500 account. Okay, so the first thing that you're going to want to do is you're going to open your broker, and you could do this on any charting platform you use. You're going to type in the MACD. So this is going to be the MACD indicator. Now, I'm going to leave it as default. I'm not going to change any of the settings. I'm going to hit apply and OK. Now, MACD stands for Moving Average Convergence Divergence. So it's measuring our moving averages, and we're able to use these to understand when to buy and when to sell. So you can see the two lines right here on our chart. These are our moving averages, and you can see the bars, whether they are green or red, those are measuring the speed at which that stock is moving. And the bigger the bars, the faster the speed, and the further apart our moving averages are, the faster that stock is moving. So we can trade what is called a moving average cross. So the cross of our moving averages on our MACD is going to let us know whether we should be long or short. So long is calls, short is puts. So essentially, if we look at any stock here, for example, Tesla, heading into the open, we can see how the moving averages here came together. We could see how our bars started to die out. You could see the shade of red and our first green bar there. So you could see the cross. Our blue crossed above our other moving average, okay? And so when we cross above, that is going to let us know that that stock is going to start to move up. And when we cross below, for example, here, you can see how we cross below, that is going to let us know that that stock is going to start to move down. And so that will also be accompanied by the green or the red. And so we can see here, right before the open, if we identified Tesla, we could have Tesla on our watch list, and we could be like, okay, Tesla just crossed. We started forming green bars. Our moving averages, they came together, they converged, and now they started diverging. So our speeds are increasing, and we're starting to move up. And you can see actually what happened was, if we bought calls, look at that crazy move up to that high. So it's always really hard to time a high or time a low. We're never going to get that exact high or that exact low. But what we would have done is we would have then waited, one, for either our bars to start dying out. So for us to start forming lower bars, you can see how our highest bar was here, followed by a lower bar. This was our first sign on this lower bar that Tesla was starting to die out and was starting to pull back. And that would let us know that upwards momentum was coming to an end. Does that make sense?
Yeah.
And then your exit could be on the cross when we cross back below. So let's look for some examples. Let's find some good examples. We can pull up, not SPY, because we're currently in your SPY contracts.
I wouldn't mind looking at it.
We'll see at the end of this video, okay? So let's pull up Microsoft. Now, this is something I do, right? every morning I am trading live inside my mentorship. Now, all my students are able to essentially sit over my shoulder like you are, watch my screen, see me enter and exit, and they can copy and follow along, right? Copy the trades that I'm taking. I use MACD. That's one of the strategies that I use. You'll learn more as we go and as we progress, and I'll obviously get you inside the mentorship. So you could trade the system, you can watch me, you could copy my trades, but you're learning a very simple way to apply MACD today in this video. And if you guys are interested, I'll put a link in the description below. You can check out my mentorship, and I hope to see you over there. Jay, with that said, I want to have you first identify, when we pull up our chart, whether you would be long or short based off of where our two moving averages are sitting, okay? And we can really play this through, and like, obviously this is historically, we can see how our trades would have been. Okay, so we're looking at Microsoft. Let's look off of the open, okay, at 9:30. What do we see here? We saw our moving averages cross.
Okay, yeah.
Cross above to the upside.
Yep.
So what does that mean? When we cross above to the upside, we flip from red to green.
Green. It's going to start going up.
It's going to start going up. That's a sign of a bullish momentum or an incoming bullish trend. So at this point, what would we buy? Would we buy a call or would we buy a put?
Call.
Buy a call, right? So if we bought calls right here at 9:30, we're in calls. When would we get out? When would we sell that position? Okay, let's like mark out our entry here. Let's say we enter here somewhere on this 10-minute candle. When would we sell? If we look at our MACD on the bottom.
Probably, wouldn't it be when you cross again?
Yes.
And it starts going down?
Yep, exactly. So our next cross was here. You can see how we kind of started to flatten out at the top and started trading in a bit of a range, right, sideways. And you can see how our bars were pretty flat. Like, we weren't seeing bigger bar after bigger bar or even smaller bar after smaller bar. This was just flat, right? Mm-hmm. And you can see the speed at which the stock is moving. Again, the further apart, that means they're moving faster. Now, when they started to come together, when they started to converge, and when we started to see volume, okay, start to die down, this isn't volume. These are just a way to visually see where our MAs are at in correlation to each other. But just knowing that, you know, volume was dying down as in the sellers were getting less involved, right? We didn't have all these people buying up the stock, push it up, buying up the stock, push it up. We had some people start to sell, and then we started to balance out there. Okay, cross, that is our exit. So that would be at just about 12:10, okay, which would be here, somewhere within this 10-minute candle. So that is a great trade, right? We entered here, traded calls up to here. We almost caught the top. Again, it's very hard to catch the top. So we entered, and then we exited upon the cross.
It looks it, yeah.
So what you would do would be you either trade calls when we cross above, or you trade puts when we cross below.
Wow.
You could have also traded calls, sold the calls for a profit, bought puts, okay? Now we're in puts. Let's say we're in puts here. So this is our put entry. We enter right after. Now you're short, okay, because we crossed back below. Now keep in mind, see how we flattened out again throughout the day. Not a whole lot happened here, but green, we never came back into the green. They never came together. And then look at this. Aftermarket, if you held this trade, boom, red, red,
wow.
red. Now the thing is, I don't like holding trades unless it's like a swing trading strategy overnight. This is a day trading strategy. We're not going to be wanting to swing on a 10-minute time frame. Now you could trade MACD on like an hour or a 4-hour, that's totally fine. But right now on a 10-minute, we wouldn't really want to hold these. But off of the open here, you know, we could have held them through the close and sold off of the open, which would have been, it looks like we would have made a little bit of money there. So we could switch to say a daily, or let's go to a 4-hour time frame. And the story's going to look a whole lot different. Like, we're not going to see as many crosses. There'll be more false signals on those smaller time frames. We'll see more false crosses. Like more noise, more chop. Like,
okay,
front of 1 minute, it's going to cross a lot.
Yeah.
And some of those are like, I would say, false signals, right? And so, again, it's going to look totally different. They're going to be crossing at different times on a 4-hour than a 5-minute or 15 or 1. Which time frame do you want to go on?
Let's do the 15.
15, okay. And any stocks in mind?
Apple.
Now, I want you to look back at the past, and I want you to just circle out where, here, let's do this, where you would have entered and where you would have exited. Okay, so if we look here, let's ignore our aftermarket and pre-market. Let's say, hey, we're day trading this strategy. Obviously, we can look right before pre-market, like right before market opens at pre-market to see if we're crossing. And then when we get the cross right before market open, we could take a position as the market is opening, right?
Yeah.
Or we could trade during the day at any time.
If I zoom in more,
You're good.
can I see it
Yeah,
better?
you should be able to see it a little better if you zoom in a bit more.
Because I want to see the bottom better as well.
Yeah, that's good.
Okay. So it looks like
So there's going to be like some false signals, like
under,
I said.
over, under.
So the gray is all pre-market. So you don't want to look during the gray. You only want to look during the black bars because that's actual market session.
Am I up here or down here?
Wait, what do you mean?
Am I looking up here or down here? Because I'm looking, it's up.
Down here.
It's crossing here. It's close, but then it's down.
So with options, we can't trade aftermarket, pre-market. So it doesn't matter what's happened in the gray because this is all, we couldn't have traded any of that.
Okay, so jumping up to here.
Yes. And if there's no clean examples, like just keep looking, keep going back, right? Like to me, that's quite a lot of chop.
Yeah.
It's chopping around because we knew the market went vertical, so
let's go this way.
Yeah, let's see here.
Oh,
look at that.
What's this?
Yeah, so where
That's
would be your buy here?
Right
I mean, we
here.
crossed above.
Wouldn't it be right here?
Yep. And what would you buy there? Calls or puts?
Calls.
Calls.
Because we can see it's crossing here from under to over. And you can see it went really fast up.
Yep.
Yeah, there was a good amount of green up, I guess I would say. I guess because it's so long.
It's moving really fast.
Yeah, but then it does start to come down, and it crosses again here.
Yeah, so something we can always do is we can actually sell when it starts to die down. We don't need to wait for the cross.
Okay.
Sometimes the cross is going to be a little bit late, and if you would have just looked at the bars, you could have gotten a better exit. That's something to keep in mind.
Yeah.
So this bar would have timed up with our high.
Okay.
So the second bar, when we lost momentum, you could have sold here.
There.
Right? That would have been a sell right about here. We could wait for the cross, and our sell would have been in this area right here. Still, like, not a bad move to catch. But if you waited for the cross, you wouldn't have you would have lost out on this portion here.
Yeah.
Want to go back a little bit more, maybe find a couple more. Maybe we could find a short, like a put where we cross where we cross down to the downside, cross over to the downside.
Oh, here we go, right here.
There you go. Look at that. And look how that's right as the market just opens, okay? This is a great opportunity where you're like pre-market, we're getting close, we cross right into the market open. What do we get in? We get in calls.
Yeah. So it's on top here at a pretty good rate. Crosses here.
Yep.
And then really, pretty quickly goes down, and for a very, very, very good amount of time.
That's true.
For a very good amount of time.
And with options, the faster the move can happen, the better, because our contracts, remember, they're decaying over time. They're slowly losing value over time. The closer the expiration, especially, they're going to be losing value. So when we could see moves happen right away, really quick, it's a really good thing for us. So show me entry, exit for calls, and then maybe we take a short entry, exit.
So then the exit would be right here.
Yeah,
It starts
market
to go on
would
top.
be closed at that point, so we couldn't actually exit. We would have to close right before the market closed.
You'd have to come like right about here,
which actually
maybe.
would have been a really great trade, right?
Yeah.
So show me entry calls. Where would the entry on calls be?
Entry on calls would be right here.
And then where would we exit calls?
Exit calls here.
And we could then buy puts.
Which would probably be
It's pretty good. Yeah, it's about there.
like right about in here.
Yeah, that's a great trade. That's huge. And then buy puts upon the cross, right? We
Yeah.
can switch from calls to puts, and then we short down to selling at the close.
Wow.
How do we feel?
Judging from that, pretty confident.
That's awesome.
Yeah, very confident actually.
Good. I'm glad to hear it. Do you think it's time to get you in the mentorship? You'll learn the other strategies. You'll trade live with me every single morning. I'll get you in there, okay?
Okay.
And we'll dive into this a bit further because we are missing some really vital key pieces to make this work. There are some confluences and other indicators that we will look at. Well, with that said, I think we should look at your trade and see, you know, if that was the right decision or not. If you had these tools, if you would have made a different decision.
Oh gosh.
Are we ready? Are you nervous?
Yeah.
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 Okay, let's do it. Oh, look at that.
Oh. Okay, wait a minute.
You're green. You've made money because SPY's going down. You can see the value here.
Yeah.
You're up about 7%. You made $33. Let's go.
Let's go. All
That's
right.
awesome.
Yeah. Yeah. That's awesome.
It's they're still going up.
Wait, what was I up?
That was quick. You could see right there. Now you're up 40.
I don't want to. If it's starting to go down right now, I don't think I want to leave it yet.
You want to stay in?
Maybe. Could we pull up SPY?
Yeah.
All right. All
You look
right.
excited.
I am.
You are. You made $40 in like 20 minutes.
45 actually.
Oh, you're still going up?
We're going up.
Wow.
So I want to break this down a little bit. I'm actually excited about this. So it crosses here.
Mhm.
So that's when we watch the market. Well, actually, we didn't even see the market.
We were just guessing.
We were just guessing. We weren't looking at the market.
But now, look at that.
It is starting to make somewhat. Wow, it's a big circle.
It's about a cross, and
Yeah.
volume's totally died out.
And you can see here.
So
We probably guessed about here. Like about. Oh, wow. Wait, how do I
well,
get rid of this? There
it
we go.
was about
Like about here.
Yep.
That we put in, and now we can see here. It's really.
yeah. And those contracts you bought were riskier. You can. That's why they're
Yeah,
going
wow.
up so much. You can flip to a 1 minute time frame. You're up $50.
Yeah. Where?
I mean, you timed the top perfectly.
What am I doing? 5?
Beginner's luck.
Yeah. Am I doing 5?
Try one. It'll give you like a more accurate picture of what just happened. Wow, look at that thing just
Holy.
curl over the top.
Wow. Down here. Wow. That's really. It's really like. Is that
It
even?
like didn't know what it wanted to do. It was
Yeah.
waiting for like a clear directional move.
And it went up, across, so it was on call.
But look at that. That's beautiful.
Oh wow.
Look at a 5 minute now. They'll all give you a little bit of a different perspective. So let's say if you had MACD, when would have you entered?
Probably around here.
There
Like
you
right
go.
in this area here.
So I think that was just a crazy guess because your directional bet lined up exactly with the.
Look at that.
Yeah, look at it. It's going.
That's projected just to go like right down.
Yeah. Look at it. You're still going.
We're at 51.
10%. So when are you going to sell now? What would be the rule for this based off what you learned?
Well, that's the thing. I don't really know because it's at this moment it is going down at a pretty
Remember,
steady
what do we
pace.
wait for? When you were charting out entry longs, exit longs, entry shorts, exit shorts.
Like right here, it's going up, but then it's starting to go down. You would want to come out like roughly around this area down here.
So remember,
Is that the question?
It's just the cross.
It's the cross. Yeah.
It just needs to
Okay.
cross. So you hold it until it crosses.
63.
Wow, 13%.
Let's go.
That's huge. But you see, like, look at 60. Oh, 75.
75.
It's really starting to go.
I'm pretty confident that if I stay in, I'll be up a little bit more because I don't know, like the spacing here, it's gonna I feel like it's gonna be a little.
Every 5 minutes, we want to look to see if that new 5 minute bar has closed and if it's closed higher or lower. So if it's longer or not. So
It
you got to
is.
watch those bars.
It is long.
So this is
Well,
right
it's
now,
getting
this
shorter
one,
here.
this bar is longer than the last bar. So that looks good still.
So I should stay in.
It's up to you. We would need to wait for another 5 minute candle close to get another 5 minute bar to see how long it is.
Maybe I should take.
But right now our moving averages are pretty far apart. So we're moving pretty quick to the downside.
And it's still going down, and it is longer.
Now is like when we would actually incorporate the next strategies that you're going to learn inside the mentorship because you'd actually know like how much more we have to go.
Yeah,
you knew
'cause-
it. You knew to get short because it crossed, but now you're kind of like, when is it going to cross next?
Yeah.
When are these going to start to die out? Like the bars, right?
Yeah.
This is when you put on another layer on your chart and you can see like in Confluence, hey, look at, now that makes sense. Like, I don't know right now. I'm blind. Like, we're looking at half the information to really properly execute this.
Which, as we were just talking, it's really...
That was good. That was a solid bar close. Look at that. Strong, much bigger bar.
I'm not at 75 anymore. I'm at 51.
Yeah, you see, so like the faster the move happens, the better, because the more the value of those contracts will go up.
But it's really steadily moving right here. That's
sinking.
That's a pretty big spacing, which I feel like if I stay in, it will go. There it goes, right there, 57.
We just need to take out this next candle to be up more than you just were. It needs to get lower than this one.
Yeah, come on, keep going.
So we have to take out.
All right, we're back at 69.
Okay.
We're going.
So look at that one. That one got to 0.16. This previous one was 0.12. Ooh, gotta be patient. It takes a lot of patience.
Does it really?
Uh-huh.
I don't have that.
Do you feel pretty confident now you could do this on your own? At least more confident than the beginning of this video when you were just guessing?
Yeah, I do feel more confident now. There it goes, breaks. All right, so it's broken.
That's
it's passed.
big. It's broken. Now you're up the most you've been, right? We're
Yeah.
just about there.
It's gone down a lot.
It's really tipping over.
We were
oh,
just
you're
at
almost up
90.
$100.
Yeah,
20%.
So I feel like I should stay in a little bit longer. But it's projected the speed's still going down pretty fast still. Okay.
That's good. That's the next 5-minute candle
Yeah.
is forming red.
Yeah.
Look at that. Woo, 99. Wow.
And it's still
It
projected
is pointing
to go down. It's
pointing
like right
straight
down.
down.
105.
Whoa,
105.
there we go. Look at that. Woo-hoo-hoo. 111.
111.
Wow,
123.
123 up 26%.
Holy.
That's a great one.
153.
153. Wow.
Oh my
That was
gosh.
that's huge.
That's incredible.
183. $200. Holy 40%.
There's a little bend right here.
Yep.
So it is kind of leveling out.
Yep. And it's like this bar, it's shorter than the last.
Yeah. So, I mean, it would have been smart to pull out and close it when I was up.
No, you don't have the right tools yet to time it even
Yeah.
better. Like, there's a lot we can do with timing. There's a lot of tools we can use to time the market better. You're up $130.
Yeah.
You could lock it in now if it looks like this thing's gonna bounce.
I think it
could just bounce up and down like this and then drop again. I mean,
it would be best to go right now, probably.
I'm letting you make the decisions.
Because, I mean, that line is really starting to... It's looking like it's going to start wanting to come up. So I think, being smart, I'm going to go out. So trade.
Trade. So, you want to get a good fill, right?
I do. Oh, no. Oh, no. How do I do it? What do I do?
Quick.
What do I do?
You want to get 101.
101?
All 6-year contracts at
6.
101.
1 like that.
Now it's too late. Now 100. 1.00.
Go.
It's pushing. Go. Now 99.
What do I do? What do I do? What do I do?
So you see if you get filled. If it like so right now.
Oh,
It should get filled if it flips right here. I would.
Oh! Is that good?
You're good. You're out. Woo! Congratulations, Jay.
What did we
That was
make?
huge. That was huge.
What did we make?
That was very cool. That was good to watch.
So
So $120. That's not bad. I think if you had the
For
other
first
tools
time.
that I got to show you, we could have maybe gotten out a little bit earlier. But that's great. I absolutely like watching you do that was so cool. How do you feel? Like that was really cool.
That was really cool.
That was very cool. All right, if you guys are interested in joining my mentorship, I'll put a link in the description below. Come trade every morning. Watch me trade this system live and subscribe for more. We'll see you in the next one.